Folks, in today's video, we are going to discuss the top 5 penny stocks for extreme growth in September 2024. Now, each stock on this video has a clear catalyst like an FDA approval date, new product launch, or otherwise predetermined date where spikeability can occur. But folks, these are not little old grandma stocks. These are stocks with huge spikeability that go up massively on catalysts and then do a big dumpito as people lock in profits after said catalyst. For example, if you look at one of our previous penny stock picks, ASST, we alerted it at $1.09 on a Sunday night before market open, and it ran to a high of $3.94 a share a few days later. That's a massive run. But do you know what happened in the days afterwards? Well, the stock got cut in half. The opportunity with penny stocks is in the reaction, playing the reaction, not endlessly holding and hoping. Penny stock buy and holding is guaranteed to make you a millionaire, but only if you start from billionaire status. So if you don't want to lose money, you want to focus on trading the moves, not letting the moves trade you. Anyways, with that out of the way, make sure that you do your own due diligence on all ideas presented here on the channel, and we're going to get right to work. Also, quick plug, if you're wondering what broker to trade these stocks on today, well, we highly recommend you give Moomoo a look. And they are offering up to 30 free stocks just to try them out. In all my years on YouTube, I've never seen a broker offer this kind of deal. So make sure to check them out if you haven't already. Link down below. I'm 100% sure you're going to like them a lot. Okay, now let's go ahead and get to work. So we're going to start with number 1, RCAT, RCAT, Red Cat Holdings. This is an emerging player in the drone and defense sector. And it has been seeing pretty solid, healthy momentum as they've been consistently getting big money attention this year. The global drone market is expected to grow quite dramatically, so that's probably why many folks are taking interest in the stock right now. The company focuses on providing drone hardware, software, and services that are integral to security, surveillance, and remote data collection. And Red Cat is attacking both the governmental and the private sector market. They specialize in advanced unmanned aerial systems, aka UAS, and related software platforms that offer real-time data and insights. Their solutions aim to improve situational awareness and operational efficiency in various fields, including defense, law enforcement, and infrastructure inspections. Now, one of Red Cat's strategic strengths lies in its partnerships, and these partnerships provide a rolling round of catalysts. Every time a new PR piece comes out for one of these partnerships, stock can go spikito. The company is heavily involved with Teal Drones, which produces military-grade drones that are eligible for government contracts. And Teal is listed on the Blue UAS cleared list, which means it's been cleared by the Department of Defense for military use. Very, very big deal. Now, Red Cat holds several competitive advantages over its competition. For starters, its in-house expertise in drone manufacturing and software. Through its subsidiaries, the company is very vertically integrated, allowing it to offer both hardware and software solutions tailored to its clients' needs. It's also got cutting-edge technology. The company specializes in drones that can operate in complex environments such as underground or in GPS-denied zones. A feature that's very, very useful, especially for the military. In terms of analysts and the price targets there, well, analyst opinions on Red Cat reflect optimism. Some analysts see Red Cat as a stock that could double in value within the next few years, especially as government contracts continue to roll in. Current price targets for RCAT range from $4 to $5 per share, with potential for significant upside if the company secures larger contracts or increases its commercial presence. What about some upcoming catalysts that can cause spikito? Well, number 1, new military contracts. As the U.S. continues to invest in its military drone capabilities, Red Cat is well positioned to benefit from new orders, and any new order could cause a massive spike in the price. Number 2, the expansion into commercial markets. Any new contract there or partnership there could cause massive spike in the price. And number 3, new product launches. Of course, any new and advanced drone could cause a massive spike in price, and pretty much all year the stock has been gearing up for what is to come. And if you look at the chart, you can see it follows a pump and dump uptrend, which is one of the best pump and dump trends you can get, because a pump and dump uptrend basically means that every low is a higher low. And so the overall uptrend is nice. You can get in during the dump phase and then ride the momentum back up, at the same time being bailed out by the overall upward trend if you get out too late. Although, again, remember, we like playing the moves but not letting the moves play us, so that's a last case, last ditch scenario. You can see that RCAT has big waves upward as RCAT reacts to a nice catalyst, and then a dump to a higher low, and then another wave upward, and then rinsing and repeating. Right now, we are at an attempt to recover from the current dump, and we are primed for a higher breakout sooner or later should history repeat itself. Okay, number 2, RSLS, Reshape Life Sciences Inc., which is targeting targeting the very large obesity treatment sector. No pun intended, but sadly it is very, very large. It's a very large segment and it's growing massively. Their flagship product, the lap band adjustable gastric banding system, is designed for minimally invasive weight loss surgery. The company's mission centers around improving the quality of life for people struggling with obesity by offering advanced surgical solutions. This system is targeting individuals who are battling obesity but also want a less invasive way to lose the weight. Something better than a gastric bypass. The global obesity management market is projected to reach $27 billion by 2030, and Reshape is positioned to capture a meaningful portion of this. And as the rolling catalyst and PR and update come out for RSLS, you should see regular waves of spiky spikito, which for those who don't speak Spanish are just simple spikes, surges in the share price. Now, if you look at RSLS's past, obviously horrible one for folks that are buy and holding. However, it has these waves that can sometimes as much as 5x the stock price in smaller case scenarios, sometimes 2x. So now with the stock trading near its 52-week lows, it's prime to set up for another wave upward if the right catalyst comes along. So what could that catalyst look like exactly, Charlito? Well, expanded commercialization of their lap band system is an obvious catalyst. There's also the case for regulatory approvals, clinical trial and new product development, strategic partnerships, obviously positive earnings reports, and so on and so forth, all potential catalysts for this stock. Okay, number 3, LTRN, Lantern Pharma. This company combines AI with biotech to discover cancer therapies. The company's RADR platform analyzes massive datasets to uncover drug candidates, and its lead compound is entering clinical trials right now. The company's primary market includes oncology professionals, research institutions, and pharmaceutical companies seeking AI-driven insights to improve cancer treatment outcomes. Lantern Pharma's AI is designed to target multiple cancer types, including prostate cancer, glioblastoma, ovarian cancer, and others. Now, this RADR platform is very, very unique. You see, by processing billions of data points, ARDR can predict how patients will respond to specific drug compounds, offering a very significant advantage in drug development. The company also has a very lean business model, which we like to see. It's not super top-heavy either. This allows it to develop drug candidates faster and with lower costs. Lantern Pharma's potential lies in the pipeline of 4 key drug candidates currently in various stages of development. The most notable candidate, LP-184, is targeted at multiple solid tumors and is currently moving into clinical trials after receiving FDA approval for phase 1 studies. If successful, this candidate alone could generate significant revenue for the company and contribute to a nice spiky spikito. In terms of other upcoming catalysts, well, you got other FDA approvals. Any further approvals or progress in the FDA pipeline related to their drug candidates can serve as significant price catalysts. And of course, you do have that partnership catalyst, which means that any new collaborations, especially with large institutions and esteemed research institutions specifically, well, those could cause a massive spiky spikito in price, or a surgy McSurgy for folks in Ireland. Le Surge Bleu for folks in France. Okay, number 4, PRPH for Prophase Labs. This one is preparing for the commercialization of their main drug, Equivir, a key antiviral with final phase trial data expected in September, so this month. Now, folks, if everything goes well with this final stage of the trial, I'd expect a massive surgy McSurgy in the price here. What exactly is PRPH though, Charlito? Well, Prophase serves 2 primary market segments, the diagnostic testing industry and the consumer healthcare market. It entered the diagnostics market during the 2020 pandemic and quickly became a key provider of rapid testing solutions. With diagnostics, its main clients include healthcare providers, physicians, and patients who require rapid testing for respiratory diseases like the 2020 disease, the flu, and the RSV. The company's consumer healthcare business targets a wide range of customers who purchase OTC remedies like Cold EZ for symptom relief. Additionally, Prophase's genomic services target both healthcare professionals and researchers with an increasing focus on personalized medicine and genetic testing. Okay, that's great, Charlie, but what about upcoming catalysts? What could cause the stock to do the holy surgy McSurgy? Well, several upcoming catalysts could. Again, firstly, the company is preparing for its launch of Equivir, a new over-the-counter antiviral that could be a game changer in the treatment of respiratory viruses. And even if it's not a game changer, who cares? As long as the stock does its surgy McSurgy, it doesn't really matter if it's a game changer. Obviously, from a humanitarian standpoint, we want it to be a game changer. But from a trader standpoint, we just need people to be pumped. We need them to be hyped. We need them to love the stock. And quite frankly, if Equivir goes on the market and it's covered across the financial media, well, that's all you need. Additionally, there are some other regulatory approvals that Prophase is waiting for, and those could cause spiky spikitos as well. Okay, number 5, the last one today, is VERI for Veritone. Veritone Inc. is a prominent AI technology company that offers AI-driven solutions for media, advertising, government, and other sectors. The company has been a key player in the AI sector, particularly with its innovative AIware platform, which uses AI to provide real-time insights and data analysis for businesses. This makes Veritone attractivo to a variety of industries, from media production to law enforcement and energy. If you look at some of their key clients here and their target markets, they got media and entertainment, legal and compliance, and energy. That's a pretty nice diversification in terms of industries of clients. Veritone has key partnerships with large corporations, including Cumulus Media, Entercom, and CBS Radio, as well as government entities. These relationships have given the company pretty damn steady revenue streams and the potential for further growth, particularly as AI becomes more ingrained in these industries. The company's expansion into the energy market with AI solutions aimed at optimizing energy grids and predicting energy demand is a major growth avenue. Additionally, Veritone's government contracts, particularly those involving law enforcement and national security, provide again a very, very steady revenue base. Okay, but what are some catalysts for the stock, Charlito, who's just looking for rallitos? Well, I found 3 here for you today. Number 1, the expansion into the energy sector is a big stinking catalyst. Veritone's AI solutions for energy optimization could become a major growth driver as demand for clean energy and grid efficiency increases. Obviously, depending on who wins the election, this could be more or less relevant, but quite frankly, I mean, I think that you'll want to pay attention to the energy sector catalyst on this stock. In terms of new government contracts, any new contracts from federal, state, or local governments, especially in law enforcement and security, could be significant price drivers for the stock. You also have increased AI adoption in media. Obviously, earlier this last year, everybody was talking up AI stocks. Any stock with major AI exposure was something that you should buy according to the financial media and according to institutional flows as well. So quite frankly, when you get another wave of that, I believe that Veritone is going to benefit quite a lot. And I believe we're going to get our nice surgy McSurgy. Any of these catalysts that I just mentioned could provide a pretty nice spike in Veri's overall pump and dump uptrend. Anyways, folks, that caps off today's video. Make sure to hit that ravishing like button and subscribe. Make sure to get your up to 30 free stocks with Moomoo using our link down below, and we will see you in the next video.